what does cashless Nigeria mean to you, and how does it contrast with what we all hear, M-Pesa and various other payment systems? And perhaps you could tell us a little bit also about the role that you see NIBSS playing in making this cashless Nigeria happen, and how you're working with MasterCard. Ade?
Right. Thank you very much. I guess whenever we talk about cashless in Africa, Kenya is the shining star. Everybody knows about M-Pesa. But I think in Nigeria, the intention behind the cashless was slightly different. It was driven by the banks trying to reduce their operating costs. Cash-based costs were about 25% of banking transaction costs. So it was a charge that was led by the banks and the central bank. And there were some key things that they wanted to achieve. The first was using that as a means of getting financial inclusion. If we can move to a cashless situation where we issue more of electronic-related instruments, maybe we could get a lot more people into the financial markets. There was efficiency, which we've talked about. And for the central bank, it's estimated that anything between 30%, 40% of the economic activities outside the banking space. So there was also a drive to bring it in. Now, what that has led to is a situation where we have a combination of incentives and intervention by the banks and the central bank to encourage people to begin to use things other than cash as we see it. So for us, cashless is everything around reducing cash. It has to do with electronic payments, and we've seen those growing by about 10, 15% per month. It has to do with the issuance and, more important, the usage of cards at point-of-sale devices with merchants. That has also been growing, but not as much. As a matter of fact, the banks had subsidized that by about $70 million in the last 9 months, where they bought point-of-sale devices and gave them out freely to the merchants. And there's also the mobile space, and that's where we believe there's going to be a lot of growth and opportunities going forward. Again, it's very virgin. Not much has occurred in that space as we see it. Things are happening. But what we're also expecting with the successful cashless rollout for Lagos and Nigeria in general is additional capital mobilization. I've already said about 30% of the money is outside the banking infrastructure. It will also have effects on regional mobilization. We find out that the informal trade between the countries in some instances are anything from a quarter to half of the economic activities that you have. And for a country like Nigeria, it's quite significant between itself and its neighboring countries. So as you move from the informal cash-based economies to a more formalized electronic-based one that's cashless, we expect to see such impacts. And then, of course, there's the issue of changing behaviors, and that's been the biggest challenge for us to date. We have a practice where things are largely cash-driven, so the issuance and usage of cards has been very, very limited. The trust for non-cash, very, very limited. And when you look at the, would I say, the opportunity cost, it takes quite a lot of selling for people to shift from using cash, which does not bear a cost whenever I receive it, notionally to the merchant. There are no fees I pay, and there's immediate access and value to one where we're showing that there are actually additional benefits in terms of safety. There's additional business opportunities that you get. And the key factor which we're finding out, the ability to provide value-added services over and beyond just receiving cash or using your electronic means to receive cash to enhance the business. So in summary, when we talk about cashless, it's all of them: mobile, cards, and electronic transfers. Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.